All right. Good morning. Good morning. What a wonderful day, right? What a wonderful morning. All our stocks are up. We're making money. The market's doing exactly what we expected it to do. That's always a good sign when you draw your little trend lines, you draw your little Fibonacci projection tools, you do your little lightsaber and all of your old school mathematical modeling, and the market follows it like a train on rails. I am so excited for Pit News Magazine for you guys to see what we've done this month. This is a really good issue. I know I say that about every issue, but this is an exceptionally good issue. Maybe it's because I love the topic so much. Not that I don't love the topic so much in all of them, I certainly do. But the topic this month is a lot of fun. Who likes conspiracy theories? Me. Who doesn't like conspiracy theories? Everybody loves a good conspiracy theory, and we cover a great one. In We cover a great one in the Pit News Magazine this month. So look forward to that. All right. What are we going to do today? We got to go in and we got to look at our options. And I think we can put on some options now. The markets are starting to perform again. I think we can start to trade little options. I think we can start looking at opportunities, take some long positions. We're looking right now at the S&P 500. Oh, this is Tesla. Yeah, it looks like the S&P 500. Let's come down here to the S&P 500. All right, here's the S&P 500. It's breaking higher on our nice little head and shoulders formation. Now, don't get too excited. I always like to be the bearer of possibly bad news, all right? I'm actually a consummate bull. I think the markets are always going to do well. Why? Because I have great faith in the American dream. I know it's been challenged lately, but nonetheless, I do still believe the stock market overall has a bullish tendency, all right? Bullish side to it. So I don't want to see, and I'm not anxious to see, and I'm not part of that camp that's going to tell you that the market's going to go down. We're all going to die. We're all going to lose everything. I think we're going to have some pullbacks. That's what happens. That's what markets do. We know that, right? 3 steps forward, 2 steps back, 3 steps forward, 2 steps back. That's just the kind of nature of the beast. And the beast has been designed, all right? And that should actually give you comfort. I know that that doesn't sound comforting, but it should give you comfort. If there are great big giant controlling factors in the world that make sure the stock market always goes up, not that, I mean, I know there's things that could happen that could cause the market to not always go up. And I know that the market is controlled, and it is, it has big players who have all the money and they can push the markets around and make them do what they want. But there are things that can happen that can cause the market to go into a bear market. So we have to keep that in mind. It's not always, perfectly bullish, perfectly bearish, or perfectly anything. It's always just it's a crapshoot. It's a carnival game. But right now, I'm feeling happy because the market is doing exactly what we anticipated and exactly what we called for and exactly what we said it was going to do. In fact, it was printed right in the manual of my book. What book? I haven't heard of any book. Oh, yeah? Well, this book right here. If you went and got this book right now and read it and notice that I wrote this 238 pages, I actually wrote this book before AI was a thing. So it's about 2 or 3 years old. And I wrote this book before all this stuff in the market happened. It's not like this stuff in the market happened and then I went and wrote the book about it. No, I wrote this book before all this stuff happened. All right. It's it's a thing. It's a thing. It's a real thing. I mean, these things really happen in the market. All right. They do go up and down. Markets go up and down. They go through these patterns. They go through predictable patterns. And in fact, I make an argument in Pit News Magazine that since BlackRock has this Aladdin algorithm and they have licensed it out to about 10 companies now, our podcasters. Do you guys like the podcasters in Pit News Magazine? Pit News Magazine always comes with a podcast lately. I mean, we started doing that, 3, 4, 5 issues ago? I really like the podcasters. I think they're really cool. They take our stuff, and of course, no secret here, it's all AI. But the AI takes the stuff and does a podcast on our stuff. Of course, we tell it what to podcast, and that's really cool. We can we direct it and say, do a podcast on this article or do a podcast on this article. And so then the AI does a podcast, and you almost can't tell it's not real people. They do it. Probably the reason it's not real people is because they do such a good job. Bruce likes the podcast. That's how you can tell, right, Bruce? That's how you can tell that it's not real people, because it's really super good. If it was real people, it wouldn't be as good. I don't know. That's my feeling. I mean, I think that they do such a fantastic job. It's unbelievable. But anyway, you guys enjoying the AI, AI help that we do. There's no way in on God's green earth that we could be doing all the things we're doing in Pit News Magazine without the help from AI. All right, we just couldn't do it with our small staff. So we need help. And the podcasts turn out really good. I mean, there's obviously human intervention, but it's done with AI. So it's really cool. But the podcasters are talking about this this Aladdin thing I wrote the article about. So they're podcasting about my article. I just can't wait for you to get it. It's going to be really exciting. So I sit here, give away all the secrets, but and this month's cartoon, it's hilarious. First thing you got to do when you get Pit News Magazine, slide down to the bottom and read the cartoon. It's hilarious. I about fell out of my chair. I come up with it, so it was my joke, but it was I about fell out of my chair when I thought it up. When I saw it, when I created it, it was hilarious. Hilarious. I thought it was funny. You might not find it funny, but I did. I thought it was very, very funny. I'm so funny. All right. All right, guys, we'll get serious here. I don't know why, but we should. We should probably get serious here. This market's starting to rise, and we got to do all kinds of technical. We got to analyze the market for serious nature, serious stuff here. This is all serious stuff. All right, let's get serious. All right, here we go. Look at this Bristol Myers still flushing like a toilet. I'm not worried. I told you I wasn't worried. Let's pull up the spreadsheet and show you what our spreadsheet's doing. Here is our spreadsheet. Now, I'll show you the mistake I made. And I told you I made a mistake. I did this one here instead of a call, and that was a total mistake. I've been in such rote behavior, right? Behavior to just go in and sell puts. Because in a rising market, that's what you want to do. You want to sell puts. But the market was falling, and so you want to sell calls. And I pulled a crazy one and put a put on. And then I was like, well, let's leave it. Maybe it'll be good. And it wasn't. And it's the one that lost us money. But let's come in and let's screw this down. We don't need those notes, right? We'll open those back up later. But I want to be able to see kind of what's going on the screen and on the spreadsheet at the same time. I don't have a lot of room. So you can see in here we got 2 calls. All right, we sold 2 calls against our long put. Is that what we did? Sell a call, sell a call. Yeah, we got 21 days and 7 days left. We're up 137. We're up 93% on that one. There's no reason to hang on to it for another 7 days to try and get that extra 7%. This one's up 80%. So really 21 days, how much do we sell it for? Sold it for 103 and we got $83 out of it. See, there's not a real reason to hang. We could hang on to that 21 day a little bit farther. Let's look at the market. See, the 21 day, if the market started to rally, if it started to rally, what's surprising is the S&P 500 is rallying, and Bristol Myers is still falling. But what's funny too is that Bristol Myers was rallying when the S&P was falling. So it's kind of doing the opposite. Anyway, it's opposite day with Bristol Myers. All right, let's come in here. Did you guys ever play that as a kid? Let's play opposite day. We'll turn and put our clothes on backwards. We'll walk backwards. We'll do everything backwards. That always lasted for about 3 minutes, right? And then we were like, I can't walk backwards anymore. So let's come in here and sell our options. Okay, how we're going to get this money right here. All we do is right click on it and we say liquidate our option. We're going to liquidate that one option. Is it hooked to anything? It's not. So we're just going to liquidate the option. And we're going to come in here. Oh, there's 2 of them. So that's good. $137. All right. So we're going to liquidate 2 of those. Let's just see if it'll let us market out of them. Come on. Snappity snap it up. Come on. Come on. Come on. Come on. Get me out. Come on. Take it off. Take it off. Take it off. Come on. Come on. Come on. What's wrong? Come on. Take it off. Come on. There must be 0 volume. Okay. Cancel that. Wait a second. There it went. Okay. We got that one off. Just took it a little while. They tried this is simulator, obviously. The simulator tries to mimic real life. And so if there's not any volume, well, they won't take one off because they'll say, well, if it was in the real market, you wouldn't have been able to get it off, which I guess is okay. All right. Kind of trying to simulate the real market. So we can go ahead and so we keep that one. The market's still flushing. And that market, we make money when the market's coming down on that one. So, I mean, geez, there's not that much left in there. Oh my goodness. How much is it? It's 21 days. If the market turns started to go back up, we'd have to sit there and wait. I don't know. I just say we take it off. We'll put another one on. We'll put another one on. We'll take another one off. I don't know. But I think we could. I don't know what to do. I'm feeling like the market's going to bottom out here because the rest of the market's already bottomed out. See the S&P, but the thing is the S&P is trying to bounce off that high. Let's go down to a smaller time frame. What's it doing today? This is the S&P flushed. What did it do on the 5 o'clock? It flushed, and then it broke higher, and now it's flushing again. So at 5 o'clock this morning, it flushed. Now it's rallying and flushing. It's back to parity. Let's come back into. See, I think it's going to come back down. I don't think it's going to go. I don't think we're going to see it break this number. I just don't think it's going to do it. I don't think it's going to break that number. But as I said before, if I was BlackRock, I would run this thing sideways I would just keep it down here for a long time, as long as I could. I would keep that baby down here. I would keep it in this region. I would not run this thing up. I'd keep it down here until June, July, August. Can we keep it all the way? I would. If I was BlackRock, I would keep that market in this range. I'd keep it in this range for the whole time, just bouncing back and forth, just doing nothing. And I would even, if it was me, if I was BlackRock, I'd just sit here and run this thing back and forth like this. I would even bring it down here one day just to piss everybody off. And then I would take it up. That's what I would do. That's what I would do if I was the evildoer. The evildoer who controlled the stock market, that's what I would do. Why would you do that, Lan? I would do that because I buy low and sell high. And I have so much money. I have $10 trillion. And I could just sit here and every time I popped it, how many times do we get false A1s? How many times have I warned you not to buy the A1s? Because I could sit here and I could give it 10 A1s. And everybody loves to buy A1s. And I would get so much money. I would just collect everybody's money every time I went to an A1 and then flushed. A1 flush, A1 flush, A1 flush. And I would drive that thing sideways for as long as I could do that until I had more money and I didn't know what to do with it all. And then I would run that market and I would sell out, sell all the way up that thing as all the new buyers are buying in. Of course, by that time, they wouldn't have any money left. They would have given it all to me. And then the market would probably turn and fall because nobody had any money left. It's a balancing act. You can't take all the gamblers' money, and then they leave the casino. So they gotta let you make some money so they can get it back. Yeah, I mean, it's a game. You can't take everybody's money because then they leave the casino, and so that's probably not a good idea. That's just what I would do. And see, I'm not a very good casino runner. That's just what I would do. So they're probably a little smarter at the casino than I am, the carnival game here. So technically speaking, how high is this thing supposed to go? Well, it's supposed to come up here. It's at 61.8 projection right now. It's sitting right at the at the magic number, right? But that's usually for retracements. 130.9 is the projection. Well, 90% is where I have that in there because the market never likes to do what we always expect it to do. So 90% is kind of, if you can just do 90%, I'm happy. I'm happy, little Mr. Market, if you can just do 90% of what we expect. That's why that's in there. So I would like to see it hit 90%, but that's our big number up there. That's the big number. And you can see the 200 period moving average. And it's coming in and it's below the 200 period moving average, which a lot of people will tell you that's a bear market. If the market falls below the 200 period moving average, they consider it to be a bear market. Now, I told you the other day, that's not a bear market. And I had a little tantrum. And I told you, I don't think that that's the bear market, right? Bear market is controlled by higher highs and higher lows, lower highs and lower lows. And we're in a perfect little lower high, lower low range, but it only did 2 lower lows and 2 lower highs. So we're in a downtrend. There's no doubt about it, but we're not in a bear market until the market breaks that number right there. It's got to break that number before we consider it a bear market. Why? Because you have to have multiple lower highs and multiple lower lows. Now we got a high here, a lower high, and another lower high. We got a low here and a low here, but this is the Elliott wave standard, off the shelf, nothing fancy, trend. It's exactly what you expect an Elliott wave to do. So it's not a bear market. It's just the pullback on a bull market. Now, it's starting to rally, just like you would expect the bull market to do. But I don't want to get everybody too excited because it can come up here and flush and it can come back down. I've seen it do it. I've seen it do it. I've seen them do it that way. But it's rare. It's rare. I have to admit it's rare. Okay, so label this baby for me, Lan. Show me the odds. All right, I'll show you. This is an X1S A1. All right, that's your X1S A1 right there. What's the odds of that being the bottom? What do we always say? Roughly 20%. I would say 25%. All right, 25% chance that that's the bottom. Was it the bottom? No. It rallied, flushed, and fell down one more time. This one here came in X2S A1. This one is like a 55% chance. All right. This is what I always say. We're holding the 17 at the blackjack table. It's one you want to play, but you got to be really careful. You want to hold this one close to your chest because it's only got about a 55% chance of being the bottom. Because you can go down to a third drive down, and the third drive down is just a standard Elliott wave to the downside. A standard Elliott wave is 3 drives up, 2 drives down, go sideways a little bit, and then 3 drives up, 2 drives down. That's a bull trend. But if all these people who are calling that we're going to be in a bear trend, this could come up here. But the thing is, it's trying to pop, it's trying to break that right now. If it breaks that, we're back into a bull market, higher highs and higher lows. But we could come in here, and we always have this X3S A1 looming down here, right? And I always say that it's got about a 75% chance that it's going to be the bottom if we come down here and do one more lower low, all right, down in here. Your probabilities get really high that that's the bottom. Right now we're playing with a 17. We're sitting on a 17 right now on the table. So do you still have some cash on the sidelines? I hope so, because this thing's going to pull back. Even if it goes all the way up to where we anticipate, 90, 100, even if it comes up and tests that 200 period moving average, that high right there. If it does that, it'll probably maybe test it a couple times, probably flush back down into the Fibonacci cone, maybe 61.8. I got this upside down. If we're going to go the other direction, Lan, you have to have it like this. Oh, not that one, this one. Grab this one here like that. So there you go. So that's the 38. If it comes back down to 38.2, comes back down here, 38.2. Then it would turn and go back up again. And that's kind of that would be our little Fibonacci bow tie, right? Here, 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 here. And how many times have we seen it go up and break above that previous high and make a little wimpy bow tie? We've talked about wimpy bow ties before, haven't we? Where wimpy bow ties come in like this and it flushes way back down in here and makes kind of a funny bow tie. So be mindful. And that's why I say keep some powder dry, because if the market comes down, you can add back in down here at 61.8, or if it tests this low down here, down in here. We don't want it to break that low. If it breaks that low right there, we're going to cry the blues, because that means it's going to come down and probably test this low. And if it breaks that low, then we're going to go down to an X3SA 175%. We'll be crying the blues again. And the media will be going, oh, crazy, crazy, crazy. Oh, no, sell everything. The world's coming to an end. Get out of everything. Why? Because BlackRock wants you to sell it to them because they're trying to drive it lower and do it one more time to you. I am a firm believer that the casino has control of the table. All right, so that's what we're thinking of here. Let's take that back over to our Bristol Myers. So if Bristol Myers should be bullish, it's not. It's like, what are you doing, Bristol Myers? So what are we going to do? I think we'll just leave this here. I'm not going to take it off. I'm going to leave it. You got 21 days left. The market's not being happy. The S&P 500 looks like it's got a little, we're at a little danger zone, not a lot of pressure to go higher. So we're going to see. I'm just going to leave that one there. We could put another one on. Let's see how much they are. Problem is, we've been looking at these things. We're like, why did we get into this thing? Bristol Myers got no volume, no open interest on any of these things. We go 21 days. Look at the volume. Oh, that came back up. Well, but look, today's volume. It's not 100. We got them over 1,000 though. $13. Spread is up 11.11%. $13 on the spread. $7 if we did that one. That's way down there, though. I don't really want to be putting in an order down that way. What about one further out, man? What if we did something like this? Why do we even have to trade Bristol Myers? Well, because we got this long, we got to pay for that stupid long call that we bought. And we're still premium paid. We paid $2,700 for it. And we've paid something. That one screwed us up, but we paid $388 towards it. Oh wait, we just made some money. We got to put more money in here, right? So we come down here to closed positions. I was trying to decide if I wanted to take profits off of that one. I'm going to leave it. So we'll come in here, and today is 4. Did we get more money today in our dividends? Do we have to go update our dividend calculator? I think we do. Don't we have some Palantir? I got my Palantir. My Palantir dividend came in. I didn't think it was going to come in yet, and it did. So Palantir came in with our dividends. And it came in at not as good a rate as I was hoping, but not too bad. I can't complain. Where's my Palantir? I'll tell you what I got. Palantir. Okay, how much money do I have in Palantir? I have, not Palantir, PLTY, the dividend version. I have, let's see, PLTY. I have $140,000 in Palantir, in PLTY, and they gave me, I got it across two. I've actually got more than that because I got 3 accounts, and I'm just telling you my 2 accounts. So these 2 accounts, and these 2 accounts, which are my main accounts. Well, the other one's got a lot of money in it too. It's got like, it's not bad. I got about the same. So let's add it too. So I got 3 accounts with Palantir in it. One of them's got $2,669. One of them has $1,666. And this one, the dividend came in at $8,300. $373. So how much is that? 8, 9, 10, 11, 12, 13, 14, 15, 16, 12, $13,600. That's not bad. Palantir gave me $13,600 this month on 100 and what I have 100 and what I say 100 and can't remember what I said. 145, $150,000 in PLTY, and it gave me 13,600. All right, that's can't complain about that. And here we are over here playing with options. Let's do options anyway. They're fun. They make good money sometimes. Okay, so 425. Got distracted there for a second. I think we're going to be able to go over and put some money into our BMY. BMY. We sold a short. Oh wait, we already did this one. Oh no, we didn't. Oh yeah, we did. Total premium was 103. I didn't add it in. When did I put that one on? I thought I had this one on. 416 was the date. 425, 416. Oh, I did. How did it said the total premium was 103 and we made 127? Well, that wasn't right. Here, I don't need this one. I already put it in there. Right there. But we made 127. I don't know how I got one. Total premium. It's 127. It says 127 is what we made. So we made $127 on that one. 86% return. That's pretty good money. Can't complain about that, right? When did we sell it? We sold it today at 425. 2025 days till expiration. It had 30. Or is that the one we still got in there? 103. Oh, look, that's the one we already had in there. 103. Undo. Yeah, that's that one. Lan, you didn't put this one in. 416. Where's that one? Oh, 416. It's this one here. No, can't be that. Oh, it's this one. No, that's that one. We did 2 on 416. We only entered 1 into the computer. Oh, man. All right. So what we got to do? Well, let's put this one in. Okay. 416, 2025. BMY. We sold short call, and we sold it at, I don't even know if it'll still tell us. There it is, 52. And that one was 52.50. Okay, that was the difference. We sold another one at 52, and we expired. I don't know when it expired. Expired in a couple of days, 7 days out. I'm not worried about that. Liquidation date. We took it off today, which is 4/25/2025. And days till expiration, I don't know. Quantity 1. How much do we get? 127. That's what we really needed to know right there. And it's out of order. Land. Okay. It's live, boys and girls. It's live. We're live. Hi, Gwen. Glad to see you here. Hope I didn't pop the illusion that I'm perfect. You guys come and see me do all this stuff live. You know, I make mistakes all the time. So don't feel bad if you make mistakes. I do it. Okay, we're up $412 against our, oh, it says it's not totaled properly. I thought I totaled it properly. $515. Okay, so we're up $515 against our $1,900, which was the premium of $2,700. It's only worth $1,900 right now. So we're down $1,400. But that's okay because we still have 135 days. Well, we bought 135 days. How much time do we have left on that option? We have 112 days. So we still have 112 days. Look at that. We've made $500, screwed up one of them, $500, and we still have 135 days, 112 days to go. So what's 35 minus 112? I mean, like 20 days. Like in 2 weeks, we've made $500 against our $1,900. And if this market goes up, this will turn positive, and then this will all just be gravy train, right? So we just need that market to turn and go back up in the next 100 days. And will it do it? Maybe. Who knows? Nobody knows. It looks like to me it's probably an X1SA1. It's probably got a 25% chance of going up. But we'll put it in there anyway. All right. So it's an X1SA1. A1, not A1A. That's 25% chance of being a bullish run right there, right? Maybe. Who knows? Nobody knows. All right, we're going through the accumulation stage, though, so we can't really complain about that too much. Which, if we wanted to try and make some money off of it, you think we could? We wouldn't be sad being, I don't know. I don't want a 25% chance isn't a very good chance. But we could come in here and say, look, if this market comes down here within the next 56 days, we could sell a put. Now, this would be one that would be intentional. The other one, I wasn't intentional. So we could come in here and we could, oh, look, there's nobody playing. But look at how many open interests there are. Wow, that's crazy. Maybe they're buying them instead of selling them. Maybe. Look at we could sell that one. That's a little close, though. What if we did, what's 21 days? Yeah, more people are doing that. Look, we got some of these guys down here selling these. You want to do that? Oh, it's only $66. We could do a couple of them. So that would be $134. 6% return. If we go down one more, oh, there's no volume down there. Look how slow it's running. No volume. That's only $7 or $7. Oh, what's the premium? $29. It's really not worth doing, is it? $66 times 2. It's not quite there yet. You want to get it on its way down, though, not on its way up. 21 days. That would only be there. Let's do a little bit farther out. Let's go to 56 days. Here's the one they're selling right here. There's nobody playing the game. There's nobody playing with us. All right. What's going to happen there? Is it going to give it to us? Probably not. They'll probably say, not going to give it to you because there ain't nobody buying them. There's 127 of them today. 7,000 outstanding. $11 on that. Come on. We wouldn't make much money on it. $11 spread against $135. That's taking a lot of our money away. Come on. Fill our order. It ain't going to fill it. They're just no players. Let's see if they'll take it with a limit order. Deleted. That didn't help. Why won't it delete? Delete. Huh. Won't even let me delete it. What's going on? Look, it's not even running. This market died. Have I lost connection? Are you guys still here? Is there anybody still out there watching me go through this nightmare? Yeah, let's close this down. Save that. I don't know what's going on here. It's locked up. Look, the market's not even moving. What about over here? What about Palantir? Is it moving? It's moving. It's just that nothing on Bristol Myers. Bristol Myers is dead. Oh, it filled it. It gave it to us. All right. So I'll put that on the spreadsheet later. It's wasting too much time on one Bristol Myers market. All right. Let's come in here. And I don't want to go down through the Magnificent Seven. We've been doing too many of those. Let's come and look at the Lands Richie Rich Fund. Well, that's where we got BMI. That's where we got Bristol Myers. Let's go to the 2. Let's go to the next 20. Okay, we haven't looked at these in a while. Okay, let's look at Texas Instruments. Oh, it's on the rally. Texas Instruments has given us that same pattern. Come on, turn this on, baby. Let's save that. How do we save that? Save and settings, all charts. So we got the ABC pattern off of this one. But that's the high up there. Look at that. How are you going to read that, Lan? Not very well. That's the high. Look at that high right there. That thing's the previous high, not here. It never recovered like the S&P did. It came up and failed, came up and failed, and then this is our down. It failed worse than the S&P because the S&P at least came back up and touched these previous highs twice. This one didn't. It broke it here. That's a reset. Well, that's where we are. Dun, 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 just like that. Right down to 130.9. Who said these things aren't controlled by some big mathematical model computer? Oh, that's what I was going to tell you. I think they work like a hive mind because they sold Aladdin. BlackRock sold Aladdin to like 10 other companies, maybe more. And so they all kind of do the same thing. And because of that, it almost makes the market more predictive because you got 10 companies all moving the market with this same basic structural mathematical model. And so the market has become almost more predictable. It follows these mathematical models even more closely nowadays than it used to because it's controlled. More players, bigger players, all using the same formulas. And all we have to do is just reverse engineer them and say, well, this is where they like to send it with their mathematical Aladdin model. And that's where it's going to probably go to. And then they're going to probably bounce it off of that. And that's what happens. But what about the news, Lan? The news. Yeah. The news is just a cover story. That's why I can't wait for you to read my article in Pit News Magazine. All right, here we go. What are we going to do with Texas Instruments? Anything? 2 drives down. Well, label it so we know what your odds are. This is a hard one because it's already got 2 drives down, and then it came up here, broke the previous high, and then flushed again. How do you want to count that? Well, we're going to count it just like the S&P. We're going to use that as a guide. We're still going to call this our A1S, A1, 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 A1. What is it? X1S, A1. Like watching sausage being made. You guys want to watch the real deal. The real deal. You come and watch live X2S, A1. You could go watch those guys that just pre-record everything and take out all this stuff if you want. Those guys, they take out all the boo-boos. So this is an X2S A1. So again, what's our odds of that being the bottom? 55%. That's my calculations. What's this one? Well, that one's about a 25% chance of being the bottom. And you can see it failed. Came down to a 55% chance. We're back to having a 17. So we could sell. Is there any options down here? That's the question. 56. Let's just look at 21 days. I like to do a shorter if possible. Premium put. Oh, this might be better. We might be in better shape here. Except for the market's going up. So let's go sell options, boys. Sell a call, sell a put. What? I don't want that one. I thought I did 21. Okay, sell a put right here. $65. What happened to our $650? That's way up there, man. Oh, I don't want to sell it right there. I want to sell it down here. I want to sell it right there. Well, that's only $71. That's only $71. What are you selling it down there for? Well, because that's where it's safer to sell it. I want to sell it where it's safe. $141. 21 days. Let's go look at the next one out. 56 days. We sell it at the money. That would be really nice. We get a lot of money. Big money there. But I don't want to sell it there. That's better. Let's put one more click. $300. $300. I don't know if that market's going to keep going up. It'll probably pop right now and come back down a little bit. Let's wait. Let's wait on that one. If it goes up, I'll feel sad. But if it pops back down, just gives us one little down bar, one more down bar, we'll be better shape to put one on there. Or will it even matter? It will matter because this is a rally bar today. You're only getting like the premium $782 and the theoretical value is $1,000. You're getting it for a real. It's costing. That's not good. You want to get it the other way around. You want to be getting $1,000 when it's only worth $782. But we're getting it for $782 and it's worth $1,000, and we're selling the premium, so we're getting way less than what it's worth. It means you could buy it, but nobody wants to buy it. Have to wait until the market flushes. Then we'll get some buyers in there. I'll get some buyers in there. We're an option seller. We want to sell some options. All right, let's come in here and go to the next one. That was Texas Instruments. EOG. That one's on the rally too. Ooh, look at this though. Ooh. That's a double top right there. Oh, it broke it. Look at this. Label it, Land. Label it. Okay. X1S A1. You want me to put the number in there? 25%. 25% chance that's the bottom. Is it the bottom? No. How about this one? X2S A1. 55% chance that's the bottom. Was it the bottom? No. That baby rallied up and flushed like a toilet. Woo! EOG Resources. This one here, that is an X3S A1. That is 75% chance that that baby is the bottom. Where do you get 100% chance that it's the bottom? Never. What if it goes down and does one more? What would you call that? Well, halfway between 75, we could come down here and we would say that it was an X4S A1, which is really rare. We'd probably say that that's more like an 80% chance that the market is at the bottom. If you could get an X4S A1, those are so rare. Doesn't mean they don't happen. They certainly do. All right, but we're at an X3S A1. So the problem is that it's on a rally bar again. If we come down and look at our options positions, and we want to get a long position down in here, we want to get long, but we want to wait for this market to click those blue buttons, pull back a little bit. That's where we want to start looking to get in. We want to start selling our premium in there. All right. Because we think we'll get a little ABC bottom. So that's usually what happens. Market comes in, comes up, breaks those blue lights, and then it turns and comes back down about 50%, about like this right in here. Then it turns and starts to go up. So we have hope. We have hope. All right. We have hope. And so what we'll do right now is not the opportune time to be putting in a, you could sell a call, but we don't have any long positions to sell it against. We'd have to have a long position. Can't do that. If you don't want to sell a naked, you could do a, well, let's see what these options are doing right now. We think it's going to pull back, right? Let's do 21 days. And that would be 440 at the money. 470 is what they're worth. Well, they're not even giving us money there. They know it's pulling back. If we sold one there, let's go up one click, 2 clicks. All right. That would be receiving $540. So we would receive 540. That's a put option. That can't go that direction. You're going the wrong way, Land. Calls. See, I told you. Not perfect. If we do let's do one click out of the money, 346. We're going to go sell here. One more. 327. Let's buy some insurance because we're not long the market, so we have to buy some insurance to the upside. Otherwise, they're going to margin us out $3,000 for our three. That's not bad, 11%. That's a cash secured call. I don't want to do that. Why not? I don't know. It's not traditional. Let's come in here and that's an expensive little bugger, isn't it? Man alive, look, can't do that. Look at the spread on that thing, $105. There's no volume. There's no open interest. Nobody's playing with us. Nobody's playing options with us. Sucks. Let's go play somewhere else. Kimberly Clark. Do you guys have any options in Kimberly Clark? No. Come on. You guys, nobody's playing options. How about Lockheed Martin? You guys playing options over here? 21 days. No. You rotten stinkers. These are usually really good options markets. Nobody's playing options. Look at this. There's a couple of people got a few things in here, but look at the volume today. Well, the market's flushing on this one. Alteria Group. How far back's that thing going to come? Well, if it just comes back to the Delta Kona probability, probably back into this region here. What do you want to do on that one? What do you want to do on that one? Let's come and do this. I don't really like it either. Nobody playing options on any of these. We can't get anybody to play options. Look at this. There's a lot on the open interest, but the volume is just dead. Look at the spread on these things. Nasty. How about that one? Come on. Dead. Texas Instruments, we already did that. And they're dead too anyway. Oh my gosh. We can't play any options on any of these. USG. Look at that, how dead that is. Look at that market go. Wow. Gold strategy. Of course, that's gold. Did you guys get your gold? Did you get some gold? Did you buy some gold? I got an uncle who bought some gold. He was happy. All right, Verizon. Verizon's plan. Look at that stupid $17 premium on. Nobody wants that dumb thing. 187 volume today on the $17 option. Somebody's buying lotto tickets. All right, I'm not happy with that. Not happy. Let's go. We're not having any luck with our options today. None of our traditional good options plays, or nobody's playing options on them. Everybody's too focused on this stupid S&P 500 and what's going on over there. All right, let's go look at our. Let's see if we got some money. Let's go see if we got some money. I think my UBI, UTI, UTU. UTI. UTU. Okay. I think we got some Palantir. We got a little Palantir in here. So that was the whole idea, right? We bought the Palantir with the profits. We put, look at that. PLTY is what we put it into. Okay. So we put 4,375 into Palantir so we could get our premiums. How many shares do we have? 68 shares. So take our 68 shares. I'm really disappointed in the options. We didn't get to do hardly any option stuff today. You know me, I love options. And I'm a little disappointed in our options volume. There's not a lot of options volume. So let's come in here. Let's come in here and figure this out. I need my calculator. So we've got 68 shares of Palantir. And it paid, let's go look it up. Okay, that's our new calculator. I showed you that already. I'm pretty excited about getting that ready for you. All right, PLTY. Oh, it was the same though. It was like 532. It's the same. They paid out the same. They haven't posted it here in this little program yet. 532. So 532. $5.32 per share, and we have 68 shares times 68. $361. That's not bad. So when did we put that in? We put it in just a couple of days ago. 423. It's 425. So 2 days ago, we put it in and we got our 4,375 because we put it in the day before the ex-dividend date. The ex-dividend date is the declare date, and you have to have it in there before the declare date, and then they give it to you. Now, I used to think that they would prorate these things, and then I got told they can, but I was like, I swear I seen them do it. But I think rather than prorating it, I think what they do is they have a reconciliation date. And I was looking at the reconciliation date thinking that it was a prorate date, that they were prorating your things, and then I was like told, no, they can't do that. So I was corrected on that one. They can put it, they have to give you the whole thing, but they do have reconciliation dates. So they'll do like 4 in a row that are, or 3 in a row that are really big, and then on that 4th one they reconcile, and it's adjusts either bigger or lower based on what those were. And they do it more on the, of course, you get one every month on the ones that are coming in on the weekly. All right, so we got to put this in 361 on Palantir. Come on, land, focus, Palantir. So we got our first one. Today is 04/25, 2025, and the amount was how much? 361.76. So we made $361.76 in our account. Did that show up here? No, it did not. Payment received. So I'm going to bring all these down. It's easier just to do it like that. And then to just take all these back out. Clear content. There we go. Okay, so this one, we got to do the same thing here. Bring these tables down. Just like that. And then we just easier just to clear these all out than it is to sit there and try and bring them down one at a time. All right, so current market price 61. We paid 64, so it actually went down a little bit, 61.29 from when we paid $64 for it. Well, yeah, that's because they paid their dividends. All right, so most recent dividend paid 533. I think that's what 532. So 104. That's what we're at monthly. Okay, everything looks good. All right. Okay, what's the next one that we? Oh wait, we got to put this in here. Palantir equals this one here. All right, that looks good. So we've made $6,237. We got to do one more though, because we got another YMAG in here, right? We get paid out YMAG. Did we get the fund on YMAG? YMAG. Did this come in? Did you tell us what it is? Come on, you guys are. What the heck is going on with this little FinViz? They're completely losing their mind here. They haven't given us the last 2 dividends. I don't know what they are. Where's our? How come we don't have our AI up? What's the one we like? It's called. Is it in my drop down? No. What do we have? Perplexity. All right, Perplexity. What was the last dividend payout for YMA? Was it YMAX? YMAG. Do we have YMAG or YMAX? YMAG. No YMAX here. What was the last dividend payout for YMAG? Most recent dividend payment was 9 cents, 9.2 cents, 924. Okay. Let's go see what that is. 9.24. And that was on Friday. Oh, wait. Today's Friday. Oh, well, it's today's payout. Let's go put it in there. YMAG. Oh, look, we got to consolidate these. I'll do that offline. 04 dash 25, 18, 19, 20, 23, 24, 25. Count your fingers. 2025. 425, and we got, I forgot the number. 9 cents, 0.0924. 0.0924 times, how many shares we have? 2,600. and 30.19 shares. Do you want this spreadsheet? Equals $243. You get it with your Pitt News Magazine subscription. So when you get your Pitt News Magazine subscription, look on the bottom of the email and it gives you the link to this so you can download this spreadsheet. All right. So let's come in. Wait, where have I got to put this? Over here. Lane, you're getting scatterbrained. 243.02. 243.02. All right. And that goes over here in this one. So we get to add the sum of these 3, 4, 1, 2, 3, 4, just like that. Okay. So I think that's it for the month. This month is over. We don't have anything else coming in this month. Do we? No, we got everything for this month. That's all the things we hold money in right there. And so in the month of April, we have made $6,480 on our $170,000 investment. So we have $170,000 is what we've invested into these different yield max funds. And we have made $6,400. That's better than last month. Last month we only made $5,700. But we added Palantir. So we still did better anyway, because that Palantir was only $300. Where do we even make more? Tesla. Tesla came through. Way to go, Elon. Way to go, Elon. Misty went down a little bit. Microsoft went down a little bit. YMAG went down. Tesla's the one that made us some money. Tesla kicked some butt this month. That's why we're up $600. $6,000. Oh, but look at February. We were up $7,000. Well, Misty really paid off that one, didn't it? January, we made $7,000. 7,000, 7,000, 5,000. We're coming back. We're going in the right direction anyway. Let's watch and see what happens in May. See if we can't beat April. All right, guys. That's how fun it is. It's fun to make money. All right, Bruce says, I'm still here, Land. Sometimes I wonder, you guys. Watching all the live mistakes that Land makes. We're real. We're really real. I don't edit any of the mistakes out. All right, that's where we're at. You guys all saw that the software I'm using for this stuff called Track and Trade. Trackandtrade.com, stocks and futures. If you want your copy, go get it. And you can use my settings. All right, that's that. And there's a spreadsheet. You can get that spreadsheet when you come in and you sign up and get your Pitt News Magazine. Get your Pitt News Magazine here. Feel like a salesman. Get your Pitt News Magazine here. Like one of those guys on the side of the road in New York City. Magazine's here. Come and get your Pitt News Magazine. 50% off. I swear I'm going to change that. Maybe I'll do that today. I got to change this graphic so that it doesn't have 50% off anymore. I got to get rid of that 50% off. We've been doing that way too long. Everybody's getting it for 50% off. Today, only $19.97 if you use that code. But that code is going away. How many times have I said that? I got to get some time to go in there and do that. I'm building my calculator, and I'm really excited about it. This is the new version. Let me show you the new version. We changed the colors, but I don't like them. I'm going to change it back. Don't worry. I'm going to change it back. I'm going to change back the new colors. And this is for people who have Pitt News Magazine. Not that calculator. This is the calculator that you get right now. This calculator's already in there. Where's the other calculator I was playing with? Right here. Retirement calculator. This one here, you come in here and you answer all these questions. This is so cool. You come in and you answer all these questions, and then it tells you when you're going to die. Haven't you ever wanted to know when you're going to die? What year am I going to die? Well, AI tells you. It goes through this whole thing. It's 29 questions, tells you when you're going to die, and then it calculates and says, hey, how much money do you have now? If you're going to die here, you're going to need this much money to make it through. So it's nice if you know a date, right? I don't know when I'm going to die, so I don't know how much money I'm going to need for retirement. Well, fill out this little form and it'll tell you when you're going to die. It's all based on life insurance mathematics. Life insurance, that's what they do, right? They're pretty good at gambling. They have pretty good guesses of the date you're going to die. So we went in and we took all of their formulas and we filled them all out in here, and you can put in all your information and it tells you the day you're going to die. It tells you the year you're going to die. And then you say, well, and the reason we're doing that is obviously so we know how much money we need to save up for retirement, how much we're going to be able to spend. And you have this much money and it's growing at this rate, you'll be able to spend this much money until the day you die, and you'll be fine. Pretty cool, right? I mean, it's just kind of a funny little concept, but it's fun. I mean, it works. I mean, and it makes sense. So it's like, I got to know when I'm going to die so that statistically speaking, when would I die? Living the way I do. And it tells you, yeah, Lan, you're going to die at this rate. And how much money do you have? You don't have enough money. You got to make more money. Or, oh, you got plenty of money. Why don't you retire today? So it tells you that kind of stuff. It's really cool. So I'm still working on it. Not done yet. It'll come. It'll come. It's coming. It's coming. Of course. It all tied back to Pitt News Magazine. You got to have a subscription to get it. So there you go. That's what we're doing. You guys couldn't even see it because I wasn't even showing it to you. Here you go. Back to the... How do I get rid of this? It won't let me switch. There it is. There's the retirement calculator. It's not that fancy. Not fancy. It's not the pretty color of the other one. Here's the other one that I was showing you. So this is a pretty color one. This is a really cool one. This one you already have access to if you have Pitt News Magazine. Yeah, I already have this one. This is that one. And then we have the investment calculator too. This is really cool too. But you guys have that one. But the new one, this is the new one. This is the new one. It tells you when you die. All right, guys. Nobody wants to know when they die, and so I don't know how popular this will be. But I think it's really cool. So we're going to do it. All right. That's all I got for you today. So if you had fun watching all my mistakes and my blunders and couldn't find any options, even though that's what we were supposed to be doing, all the options markets are dead. Nobody's trading options. Usually those have options. Usually those have good options. People are really trading those options. Remember when we were looking at them before and they had all kinds of options? Not anymore. All right, guys, I'm going to let you go. We will catch you Monday. Have a good weekend. Take care. It's good to see you here. Thanks for coming.